The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. From sunny Las Vegas, Nevada, where they're going to have a money show. And the folks from TFNN, Tommy 1 and Tommy 2, will be here. So, anyway, let's just talk about the markets for a second here. And then I had a request from two different people, which I'll try to answer today. As you can see from this S&P chart, it's also similar to the one as the IWM, the small cap. We went up and we still did not take out the highs of September the 17th. Now, we did it 4 times with the S&P futures. I have never seen that much divergence ever. The only thing I can say is it looks like there's a little more selling in there than people might want to realize. Now, I've had a request to talk about the fact that I had lost a lot of money back in 1974 and how I got it back and that, that kind of thing. And so I'll tell you, on July 28th, 1974, my account hit a high of 7 figures. And on October the 20th, no, I think it was October 22nd, 7 weeks later, I owed Conti $2,700. And how do you do that? Well, you do that by being a raucous little 30-something and not using stops and adding to losing positions and just doing just craziest things because I'd made money so easily it was a joke, really. So what I had to do was, get it back. And so I went through a process of, studying. Luckily, I had a good mentor in John Hill. John's 89, still writing his, or doing his futures truth and trading all the time as all of his kids. And we'll see what, it was really something. So we'll see. Anyway, even though I lost the money, I knew I could make it back. And so I asked my college professor that got me started in this. He laughed at me. And he said, "You think this hasn't happened to everybody?" And he said, "Maybe yours is a little extreme." He said, "But that can be a good thing." So I went over my statements and found out what I had done wrong. And mainly I was adding to losing positions. Not only that, but I would be long 10 and I'd add 30. I mean, it was stupid what I was doing. And anyway, I found the Gartley pattern in 1971, 72. I didn't do much with it at that time because I wasn't really into studying because money was too easy to be made. But after I'd lost it, I started focusing on the book more and more. And I saw on page 221 and 222 in the book that he had spent 2 full pages describing this pattern, that basically you're looking for that ABCD Thunderbolt pattern coming into the market, and you want to buy that first ABCD pattern. So that's what you did. On a bear market, you sell the first ABCD pattern. On the bull market, you buy the first ABC pattern. Okay, now we are in late 1975, so it's been well over a year that I hadn't traded. I traded the first 2 weeks after my debit balance because this was before the CFTC, so the commodity firms had control over the margin. So they would allow you to trade in the margin balance if they wanted to, and they gave me, access to how many ever I wanted to trade because I'd paid so much commissions over the years that, it was basically a non-event for them. So I waited till I saw a nice little pattern in pork bellies, and I bought it, and the pork bellies ran up about $3,000, and so I was out of debit balance. I never traded again for over a year. And so now we're into late 75, and my good friend and also my mentor, Dave Nelson. Dave lived in Pasadena, California. He was about 20 years older than me. He and Jim Sibbett and Earl Haddady were the deans of the commodity markets in the Los Angeles area at that time. I can't remember. Well, Jim Sibbett and Earl Hannity had a service for commodities. Earl Hannity was the guy who was the originator of the opening price principle. He wrote a little book about the opening price principle. 25, 30 years later, I wrote a recap of what he did. And John and Hill and I did a lot of work on the opening price, which still works to this day, but, neither here nor there. Well, anyway, Dave Nelson's specialty was soybeans and soybean oil. And Dave's friend, Oscar McClure, was one of the large soybean speculators at Conti Commodity. Oscar came in dressed to the tens every day, man. He had French cuffs, silk ties. I mean, he looked like he was ready to go to the opera. And he sat there in the room all day long, just in his suits and ties, and but he was a real dapper gentleman, much like oh my God, Elliot. Oh no, come on, there, son of a gun. Let me think a minute. The guy from Memphis. Oh, gee whiz, I can't remember his name. The great cotton trader. I'll remember it in just a second. Come on, Mr. Z. Give me the name of the guy, and it's a friend of Tudor Jones. Come on. I see him standing there. No, it was not Elvis Presley. Eli Tellis. You got it right. Thank you, RJP. I appreciate that. He looked just like Eli Tellis, and Tellis was the great cotton trader. But anyway, these fellas would meet, and I would meet with them, and I'm the youngster. I mean, they were all 25, 30 years older than me, and so I'm absorbing as much as I can. And they were mapping a strategy for a bull move in soybeans in 1976, a year out in the future. And what they were watching was the fact that the soybean oil market had been really hit hard. It was down quite a bit. I think it was trading at around, I think $9 a pound or something like that. What, it was $9 a gallon? Yeah. $9 a gallon. I think $9 a gallon is what it was selling for. And what they were doing is they were looking at spreads. In other words, it was called the July Dees bean oil spread. You're buying new crop bean oil and you're selling old crop bean oil. And the spread on this was out at maximum carrying charges. The interest rates were so low at that time that the only way you could lose if you bought July soybean oil at a big discount to the December soybean oil, which had a premium, you couldn't lose any money because full carrying charges applied, interest and storage and everything. So it really had a downside floor to it, and the margin on this spread was only $150. So you could control 60,000 gallons of soybean oil for roughly $150 for the spread. The outright margin on the soybean oil contract was about $1,200. Anyway, I looked interesting. It was a Gartley pattern. It just looked really good, and I was about ready to get back into the thing anyway, and so I started telling everybody who would listen to me, my family, my friends, my doctor, attorneys, dentist, anybody who would listen to me who had an interest. I told them, I said, this is a good situation, might not work, but the downside is only a couple $100. The upside could be something significant. Dave and Oscar thought that it could go at least 4 times the price of what they were looking at, which was that was a lot of money. That was $3,600, and on a $150 investment. So you can imagine, the potential that it had. Well, I started buying these things. Went through probably 3 months of buying them, and the July Dees soybean oil spread did not move hardly at all. Then one Friday afternoon, right on the close, July soybean oil spiked up 20 pips, and December dropped 20 pips. That was a 40 pip move, which is $240. So if you got $150 in it and it moves 240, you've made 80%, really quick. And the first thing that happened on Reuters was you ran over to the Reuters machine and they talked about this big aberration that happened in soybean oil on Friday, that this thing would be corrected. It was just a fact that there was very little liquidity and all this kind of stuff. Well, I was waiting for Monday morning for them to take all the money away from me. So what happened was on Monday morning, the spread stayed the same. we had moved 20 higher in July and 20 lower in D. So I'm long 20 and short 20 on the right side. So I've made 40 pips, and I have the 40 pips stays with me all day. On the end of the day, another 10 pips, and the next day another 10 pips, and the next day another 10 pips. And then when Friday came, boom, 40 pips in the July and down 20 in the December. And now we have made over $450 on our $150 investment. And believe me, I had a lot of these things on. I'm talking well over 1,000 for everybody that had been following me of what I was doing. And so this started to go. Folks, that thing worked for 6 weeks. It eventually went to $9 over, which was just a huge thing, and it was just really something that was, just really great. Anyway, that's how I got back into the game, really big time. In fact, that's what got me my job at Drexel Burnham, because I had so many people involved in it, and I stuck with my guns, and it worked out. I got out on the high day too. It was into a crop report, and I didn't want to risk anything, and so I put my orders in to get out, and I just got very, very lucky. And then I took a 6 weeks vacation, which I need one now. And but anyway, that was how I really did that. And then when I got to Drexel, basically I did the same thing in gold and silver, because I started with Drexel early 1976, and silver and gold had just started their runs, and I was extremely bullish silver and gold, and that worked out, really well. So that's basically the story. Two people asked me last night by email, to ask how I came back from, devastating loss. And, it wasn't really devastating because you had lost a lot of money, but, I'd taken a lot of money out on the way up, and, it's just money. I mean, it's not a big deal. You just can't get too emotionally involved with it. And that's what the problem is. There's so much emotion when you keep score with money that really screws people up sometimes. So you can't really think about that very much. And that's the whole thing. Anyway, we do have some pretty good activity today. Everybody is talking about the Fed. I wouldn't be surprised if they did it today or tomorrow. They're getting a lot of pressure from hedge funds and politicians and everything else. And believe me, they buckle under pressure just like everybody else. So we'll probably see a quarter-point rise. And one thing it will do, it will make the markets go absolutely wacko, either up or down. I really believe that, because people are so sensitive about it. It's a self-fulfilling prophecy when it happens. Even if it spikes up or down, it's going to reverse, would be my guess. Now, we hit a major number in the Treasury bonds this morning, up here at the 158.28 level. That was a 61% retracement move back. We're still holding, that level quite easily. So we're going to take a little break here. We'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I've posted into Tiger TV the chart of the Treasury bond. We were looking for that 61% retracement to come in up around that 158.28 level. We hit 159.01, I believe. We're just 10 pips so below right now. So we'll see, what happens. The bond market is still bearish. It's just having this, counter trend rally after being, tremendously oversold. And that's pretty much what we're looking at with that. The way the markets are acting, it looks like they're getting ready to anticipate a rate hike. And the reason why I say that is they're a little jumpy, which is normal for what we're watching. The key to remember, and this is just my opinion again, if we look at this long-term chart of what's happened in the markets here over the past weeks, you'll see here this massive 1, 2, 3, 4, 5 expanding triangle in the New York Stock Exchange Index. You'll also notice where I have those 20-minute lines marked with the red arrows where the retracement came back and touched the break of the downtrend line. That's basically what that line means. And if you'll notice at each of those times, it was either a 786 or a 61% retracement. This particular one that occurred on the 9th of October actually was a 50% retracement on the New York Stock Exchange Index and also on the S&P 500 cash. Now, the futures took out the high of September 17th, but we did not do that in the cash at all. Didn't even come close, as a matter of fact, which for me that's very, very unusual, because the futures and cash have to run together. They meet at options expiration on triple or quadruple witching hour. So we already know that. But when there's this much of a divergence, and this is substantial, the only thing I can attribute it to is that the cash index is cash, and people have to put up real money for that. And if they do margin, I believe it's 50%, whereas futures, they work on a 5% or less margin. So those are the kind that maybe really just very unusual. I've talked to several of my friends that have looked at it, and they can't understand it either, but we'll see. We didn't make a higher high in the NASDAQ. We only made a 786 off the high of September 17th. And even the transportations, they had a big break to the downside yesterday after 7 straight up days. And so we'll see. If this is bearish, it's got to have follow through. That's the bottom line. But if we take out that number in the cash, then that would really be a very, very bullish thing for the stock market, and then it will go up most probably for the rest of this month. So we'll wait and see. So far, it's put in a slightly bearish top here on the 13th, and remember that was in the window of the new moon. So whether that's going to have much of a long-term effect, we'll have to wait and see. Right now, the markets are holding our own up, actually showing positive signs in some of the indices. So that's pretty good. Now, those of you that trade the DAX index, which is the German S&P version, it's a fabulous thing to trade. It trades off the numbers that we look at. So beautiful. They're coming out with a E-mini DAX, which is really good, because the DAX that we trade here, the margin is 20,000 euros. To trade it, because it's a very large one. It's $25 a tick, and believe me, it moves $2,500, like you blink your eyes. So it really does a bit move. But that'll be in a couple of weeks. We'll keep you informed of when that comes up, if you do have an interest in sending it on. Someone asked a question about how did I explain to my kids what I was doing, for a living. That's a really funny thing, because when my 6-year-old daughter was starting in nursery, first grade, they had the parents' night, or what your parents do, and so she had to get up and tell what your parents did. So when we had the parents' night, we walked in, and the principal of the school came in and asked me to come down and sit in her office. And I said, "Oh boy, what have one of my kids done now?" And he said, "Well, your daughter came in, and it was parents' night." She said, "My daddy gets up in front of a TV in the middle of the night that has nothing but numbers on it. And after that, he goes to work, and then he goes to lunch to the racetrack with his friends." And the principal said, "We have to know, are you a bookie?" And no, I was not a bookie, but Drexel Burnham paid for our Bunko Ramo machines in our house, so that if we got stuck in traffic or something, we could trade off home. We didn't have these fancy computers and stuff, so it was not the same as it is nowadays. Now you can really do it easy. Okay, we're going to take a little break here now. We got the Dow down 5, the S&P unchanged, and the NASDAQ up 2.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got gold making a new high, and we just broke the 1178 level. We got up to this 1179. This is a very important level to watch, folks, in the gold, because that on the longer term charts is a 786 retracement on a shorter term high there, so you need to watch that very closely. And silver is off a little bit, so, or not following nearly as strongly, so that's something that you want to keep in mind. So what I'm doing is I'm raising my stops on the gold to 1173 in the long gold. No longer have a silver position. I got sold out of that at 1595, and so that's what I'm doing in the gold market. We'll see if it has a legs to stand on here, and it should keep running, because we could easily make 1190 in the gold without any trouble at all, folks. That's the thing, and that's what we really like to see. Oh, we got a caller in, Tom from Plymouth. I guess that's Massachusetts. Is that Tom? Are you there?
It is. Yes,
How are you, my friend?
This morning? Good.
I'm very good. What can I do for you, my friend?
like to get your opinion on the USLV. I got into it last week, and looks like it's heading up.
USLV, that's a silver.
Yes.
Yeah, I think it's going higher. This is going to be an interesting day here because silver's playing a little bit of catch up. But I frankly think you could just raise your stop on it to the lows of yesterday, and just let it go. It's at a critical level here because it's very overbought right now. And if you're in it for the long term, just put your stop at break even and forget about it. But if you're in it for a trading position, I'd raise my stop, to the low of yesterday, and then just let it go. Because we had a good correction in it yesterday, right around 40 cents in silver. It came right back really good, which is fine, but you still have to protect yourself.
Okay. Well, that sounds good. Thank you very much.
I hope it helps, but that it's better. This at a key level, Tom, because we are overbought quite a bit, and now people are getting interested in it. And they usually buy it, on a high day like this, and that's when the thing turns. So just protect yourself a little bit, and if you're in it for the long term, don't even worry about it. Just put your stop under the low a couple days ago and let it go.
Okay, sounds like good advice, Larry.
Well, we'll see. It's certainly well priced, my friend. That much I know for sure.
Yep, agreed.
Okay, thank you very much. Okay,
Thank you. Bye.
You bet. I just saw a notice here that the Toyota is no longer going to have gasoline cars in the year 2050. Unfortunately, I won't be around to see that one, but that's going to be a real innovation, I guess. They probably will have everybody will have driverless cars by then. So we'll wait and see. If everybody's going electric, it looks like oil is going to be down to about $3 a barrel here pretty soon. We have some pretty strong, support here in the oil at 45.50 per barrel. We held the 61% retracement really nicely yesterday, 46.65. We rallied $2 a barrel, and then it went up to a 382 retracement of the high, and then just came down just really, really quickly. So we'll see. Oh, this is a call-in day. This is good. Mike from Dallas, Texas. What can I do for you, my friend?
Yes, Larry. I'd like to ask you, what do you think about the new DAX contract that's coming out on the 26th?
Yeah, in 2 weeks. Yes, it's going to be the E-mini, and I don't know the specifications on it, but they'll probably, because I don't know if you know this or not, but the big DAX contract, which I really love, the margin on that is 20,000 euros, and so they're gonna bring in probably a 10-to-1, much like we did with our S&P that used to be $500 per point, and then we came out with the E-mini and they brought it down to $25, $50 a point. So they made it 1/10 as much. So that's what I think they're going to do. I don't know what the specs will be, but I know it's going to be really well received because I have friends all over Europe and they trade that thing all the time, and it's really a good one, to look at. So I think that's a really good one. We'll keep everybody in the room, apprised of what's happening with it. But it's a really good contract to trade.
Now, you mentioned earlier this morning that you think the Fed is going to come out sometime today.
Yeah, I said that yesterday. I said it Monday. I'm going to be right eventually.
Oh, okay. You're kind of like the weatherman.
Yeah, I'm just a sophisticated, guess. That's what it is.
Okay. Well, thank you, Larry.
All right. Thanks for calling in, Mike. I appreciate it. I'm sorry about the Cowboys losing that game Sunday. That was sad.
Well, that was terrible, wasn't it? They just didn't show up.
Sure was.
Well, thank you.
All right, my friend. Thanks for calling in. You bet. Bye-bye. Okay, we got the S&P up a little bit. We got the DAX up a little bit, or the we got the not the DAX. Let's say it like it is, Larry. We have the NASDAQ up a little bit. It's up 12. Dow's down 19. So there's really not much going on. It's just meandering back and forth. The bonds have dropped about 15 pips from the level we were looking at. So we'll see, what's going to happen with that. There should be some pretty good resistance in the S&P up around that 2002, 2004 level, because that was strong support. And boy, folks, there is incredibly strong support in the S&P at 1985. Once we get below that, that's going to be that'll be really serious if it ever happens in my lifetime. So that's always a possibility of happening, because that number down there is a 61% retracement of the other low that we had just recently, and it's also a 1.618 expansion of that big move that we had yesterday. So that's why that number, is so very, very important. Now we got silver moving up. This is good. Silver's getting ready to probably attack that 1630 level that we've been waiting for a long time. So let me see if I can pull up that silver chart, and you'll see it, because that's a really big number in the silver. And I've got it here somewhere, I hope. There we go. And let me just get it to pop up here. Yeah, we're only about 14, 15 cents away here, so we'll keep an eye on this, and you'll see that we're very close in silver. Silver just printed at 16.15 per ounce, so we got a chance here for it to get a pretty good move, to the upside. So we'll see what's going on with it. Right now, the market is bouncing back from its minor sell-off yesterday, and pretty much minor it was. It didn't do very much. The NASDAQ is still up about 15, and the S&P's up 2, and the Dow is still the weaker one, because mainly I believe J.P. Morgan has been hit pretty good. But the markets are holding really well so far early this morning. So we'll watch to see, what the remainder of the day looks like. As we talked about the bonds and stuff, but we did not talk about the euro, and that is, we did get up in this area of 114.40, which is a little bit of resistance, and that was the old high of 2 weeks ago. We took that out by a couple of pips and didn't really go anywhere, which basically tells you you're not looking at a whole lot of buying at that time. So that's really what we're focusing on with the euro. I still think the euro is going towards par. That's what the long-term charts tell me, but that's that's my guess. And as I mentioned to Mike from Dallas that called in, it's my guess that the Fed is going to do something. And the only reason I say that is every time I turn on CNBC or Bloomberg to get an idea of what prices are doing, all I hear is, someone telling the Fed to raise the rates. Eventually, someone with a lot of power, I don't know who it'll be, certainly won't be me, they'll be Jamie Dimon or Soros or somebody like that, and they will acquiesce to it. I will believe that the Fed will not raise rates on a down market. They will raise it when the market is going up, because that way it can absorb selling if it does come in to that point. So that's the bottom line. Folks, I don't think you can dismiss the divergence that we had in that New York Stock Exchange Index, and also the divergence that we had in especially the S&P 500, because we went 4 times, we went up above the high of February 17th in the futures, and the cash market couldn't even come close to that. I mean, it was it was considerable amount, equivalent to about 10 S&P points. So that's a very, 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 very bad thing as far as from the bullish side. And maybe they take it out today. I don't know, but that's what you're looking at when you're watching some of these things. So neither here nor there, but that's what you're taking a look at. So anyway, that's what we're watching here for this morning. And we've got a nice little rally going. The S&P's up 4.5, NASDAQ's up 16, the Dow's up 12, and it's holding. That's the futures. The cash is still down 4, which they do go side by side sometimes, and sometimes they move away, from the others. But that's what we're watching. There should be some pretty strong support at the 1985 level. We've already had good support at 1989, where we're rallying very strongly, from that. So we'll see if we have any resistance at all coming in at the 2002 to 2004 level in the S&P, because that was the old previous support, and the market goes back. That usually will make it resistance, but it's still a bit early in the day, so we'll find out if that's going to be the case or not. Now, Treasury bonds have now sold off a half a point from the high up there at the 158.28 level. The high was 159, and so it's looking like it has a chance here, to make a move, at least to the downside. Whether that has any effect or not, I don't know, but we're starting to see the euro sell off quite a bit. It's sold off in the past few minutes. It's sold off about 30 pips, and that's no easy task, because the euro is a huge contract. Well, it's not a contract. It's a huge trading vehicle, and it's real money. I mean, it's these people are in there, swinging big sticks when they play with this one. So we're having some early morning strength, just like we did yesterday. Whether it continues or not, we'll have to wait and see if it's going to do that. All right, let's get back to the gold and silver, folks. I am a little bit nervous in my long gold position. I moved my stop up to 1173. I almost sold at 1178, but I wanted to give it a little bit more room if I could. And wow, these bonds are sure working well. Well, win a few, lose a few. This is a good one. Okay, we'll see what happens with this, and we'll go from here. But we are having a really nice ABCD correction now in the S&P. The 61% retracement of the whole move back brings us right into that area 1204 that I talked about. So keep an eye on the S&P up around that 1204 level, because that could certainly be a spot where things start to move around. We'll see what happens here. We've got here in Las Vegas, we've got 90 speakers over 3 days, and my speech is tomorrow morning, and then I have another one on Friday. Steve Forbes, Jimmy Rogers are the features, and I believe Elizabeth Warren is here, a senator from Massachusetts. I believe she's one of the guests also. So we'll see what's following with that. Now, we have a really big drop in this euro right now. It's coming down. Boy, this is a beauty. Between that and the bonds, it makes my day. I think I just better take the rest of the day off, which I probably would. Anyway, we'll watch that. Now, we had to talk a little bit about the grains. Rich Anderson happens to be here in Las Vegas also, and I'm going to meet with Rich tomorrow, and hopefully I'll be able to have him on the show either tomorrow. Well, it won't be tomorrow. It'll have to be Friday. I hope to have him on, because we're starting to get a little bit of movement in the grain markets. We got the beans got up to 919 in November beans, which was a 786 retracement of that last major high that we had. So this is also at a real key level that we want to be watching. Well, I'm going to be stopped out of my gold here pretty good, and I'll be happy with that. So I don't have any complaints at all. 1 second, please. Okay. Right now we got the Dow up 8, the S&P's up 3.5, and the Nasdaq's up 18. We're taking the news of what I think it was something about inflation was a little worse or better. Well, actually worse, which now used to be better. Back in the 70s, if inflation was the devil, and now inflation's the angel, because we have to have 2% inflation for whatever reason the Fed says we should have. We'll have to wait and see if that's going to be the case or not, but we'll have to wait and see what it says. That's all you can do. Okay, let's see. We only got a few more minutes to go. We've got a break coming up here pretty soon, and hopefully we're going to have John Logan back next week. We haven't. He's not quite ready yet. I guess it's his energy level is still a little low, so we want to send some white light out to him, and keep it moving in the right direction. Okay, we're going to take a little break here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're continuing our first half-hour rally. And the Dow is up 15, the S&P's up 3, and the Nasdaq's up 14. This is the same thing that happened yesterday, folks. The S&P rallied, if you remember, 15 handles from the bottom and turned around from that level. So watch the 2002 to 2004 level, which would be the interesting spot, you know, to take a look at it. And you know, maybe this thing takes off today and never looks back. And if it does, it's going to have to take the cash index with it because, you know, it was hit pretty hard yesterday. And, well, on a relative basis, what, 1% or something, that's no big deal in that market for sure. In fact, our market doesn't have many big moves like they have in the DAX and, you know, the Nikkei and stuff. Like Nikkei last night was down almost, you know, 2%. So we'll see how the market handles some of these things. The gold is still up on the day, but still actually doing pretty good. Now, what I've done is we've lowered our stop in the gold. Raised our stop in the gold to 11.7290. That's where we're going to be exiting it, and we might lose our position and have to buy it back. But frankly, we're close enough to that 11.90 ABCD that I might have to give them the last $15 or $20 and let the bus go by, and I'll keep my quarters in my pocket. But that's what I'm watching in the gold right now. Silver did make a higher high than previously by 1 penny. That doesn't sound right either, because you'd think if it were really good, there would have been stops there and at least some movement to the upside, and you didn't quite get that. So we're almost at our level here in the S&P, up around 20. The 50% retracement comes in at 2002. And the 61% retracement comes in at 2005. So we're most probably going to be hitting some of those pretty quick in here to see how these markets react to this. So we'll watch it little by little. But this is the same thing that happened yesterday. Had the big early morning rally, and then they gave it back. And might not give it back today. And believe me, if the Federal Reserve comes in and does anything, these markets are going to go wacko, up and down. Both directions, what I believe. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.